Japan. Since Japan appears to be the world's long-awaited black swan event, your time has now arrived. This is absurd. They don't currently know how this will affect today's markets, do they? Guys, it didn't have much of an effect on the stock markets. In fact, I believe it briefly poured in the morning before pumping immediately thereafter. Thus, the stock market cryptocurrencies have been dumping, but equities haven't really, so I'm worried about this more than stocks. However, we'll be discussing the carry trade today, and this is pretty frightening. Alright, people aren't listening, but we will, since why did the shopkeepers tell us to? Thus, these are the Japanese stock market participants in. It has been falling. Well, it's down 2 points or so here, and I wonder why it dumped. Yes, but why? What caused their stock market to plummet due to concerns about this trade's unraveling? As the Bank of Japan reveals its plan to unwind $250 billion worth of ETFs, stocks plummet. That might not seem like much, but it makes a big difference, guys, and that's what we'll be discussing in this video. According to Ted Pillows, the yen carry trade has returned. What does this mean now? It might even surpass the August 2024 crash in size. What transpired in August 2024, gentlemen, before we discuss the Japanese 2-year over here? Do any of you recall? So let's move on to Bitcoin right away. August 2024. This red candle was exactly here in August of 2024. Guys, I do remember this. Alright, I recall that. The markets were alarmed. About 21% of Bitcoin and 34% of XRP were dumped. Alright, so that's what people are worrying about right now, regarding what might occur and how it all relates to Japan. Today, the Bank of Japan declared that it will begin selling $520 billion worth of ETF assets. The Nikkei 225 and other Japanese stock indices were promptly dumped as a result. That's why their stock market was tanking, isn't it? Now, however, this is only a portion of it. Investors have been borrowing cheap yen for decades in order to purchase stocks, cryptocurrency, and other assets. Because of the risks of inflation, the Bank of Japan is now scheduled for a rate hike in October. Yes, that's the reason. In order to pay off their debt, investors will sell their foreign assets and convert them into yen if interest rates rise. Like August 2024, this will result in intense short-term selling pressure. According to one article, the magnitude of the yen carry trade is close to $14 trillion, which is 3.5 times the value of the cryptocurrency markets. Pay attention to this, correct? Apparently, something similar occurred back in August 2024, guys. In essence, the carry trade involves hedge funds or other institutions borrowing yen from Japanese banks. Okay, so the Japanese yen is their currency, folks. Alright, at extremely low interest rates, possibly as low as 0 or even negative at times. All well, but what do I believe it is now? 50 basis points. Interest rates are a little higher than 0, people. However, interest rates in Japan are still far lower than those in America. Alright, in order to support it, these hedge funds and other organizations travel over there, borrow cheap money, turn it into US dollars, and then purchase cryptocurrency stocks and other assets. This is just another mechanism that has been put in place to support all of the global markets, regardless of what they may be. The problem here is that if the Bank of Japan raises interest rates, it will cause problems because all hedge funds that borrowed money will have to sell them. And institutions that borrowed money from the Bank of Japan or Japanese banks at low interest rates will have to sell their assets and pay back the loans, right? According to my understanding, this leads to what market dumps, correct? Explain the reverse carry trade. Let's view this. You briefly described the reverse carry trade here. The Bank of Japan has offered incredibly low interest rates, sometimes 0 and negative, for the past 20 years. It seems absurd that they would pay you to borrow money. However, if you need your economy to expand and you're experiencing stagflation, you'll do everything in your power to encourage people to borrow money and spend it in your economy. My concern is that Japan is being used as a puppet for the rest of the world, isn't that right? Due to the abundance of major hedge funds, pension funds, and anyone with good credit and a large size, the markets are, let's say, fascinating. Borrowed yen from the Bank of Japan, converted it into dollars or any other currency, and used it to trade in international markets. In essence, they received free money that, depending on their approach and where they parked it, they could subsequently make 4, 5, 6, 10 or 20%. Many of those notes need to be refinanced, and some of those deals that made sense when interest rates were low now need to be refinanced, since interest rates in Japan have been rising steadily. are beginning to lose their logic now that market conditions have changed, currency and exchange rates are fluctuating, and interest rates on those loans have increased significantly. As a result, there will be a liquidity crisis and a worldwide credit call in all markets. Don't be caught with Japan's down, you know. I hope you're in the correct assets and in a good position, but I hope you're not overly leveraged. Fascinating. Therefore, I'm not sure if they will raise rates here or if a Japanese bank will do it. According to this article, the Bank of Japan may consider raising interest rates in October because of the possibility of inflation. Therefore, perhaps this may be seen in October, guys. The carry trade essentially has the potential to backfire, isn't that right? What if the yen suddenly gains strength? The cost of repaying the loan will increase as a result of interest rate increases, correct? People will panic and dump cryptocurrency stocks, isn't that right? Since people are talking about it and the Bank of Japan raised interest rates from almost zero in August 2024, the crash we just discussed, this may be the black swan, guys. American equities and cryptocurrencies are trying to repay the debt. Alright, so from essentially 0 to 0.25%, there was an unexpected rate increase. After that, the yen jumped, which caused their stock market to plummet 12% in a single day. As a result of the panic, investors rushed to purchase yen in order to pay back loans as soon as possible, forcing them to liquidate their global assets, including stocks and cryptocurrency, which led to a disaster, a shock or crash to the world market. Guys, there's something really bizarre going on here. I didn't really know anything about this. I was unaware of it. I've heard of this a few times before, but not to this degree, isn't it? They've likely been doing this for a while, don't they? Supporting every market, fascinating. As Japanese government bond yields rose to levels not seen since the Bank of Japan's policy change, the Nikkei fell, raising concerns about a wider sell-off. Japan has the greatest debt-to-GDP ratio in the industrialized world, at 260%, which is I believe 2 to 3 times. I believe it is 2 times higher than the debt-to-GDP ratio for the United States, which is a serious signal. Alright, the largest of all, Japan seems to me to be the black zone event that might happen in October, which is really intriguing. Not quite yet. Higher borrowing rates on that enormous debt load are a result of rising yields, correct? After decades of near-zero rates, the Bank of Japan may eventually reverse its ultra-loose monetary policy, which has investors alarmed. It appears that we are nearing the finish, and America is clearly over 37 trillion. Even on Black Monday in 1987, a similar unwinding of leverage positions caused a 15% market drop for the stock market. Cryptocurrencies like Bitcoin have a 2x volatility multiplier, so that would have been 30% for Bitcoin and 45% for XRP. This suggests that carry treats contributed to the collapse of the financial crisis back in 2008 as well. Well, yes, I do now understand. This is absurd. Additionally, these are the rising yields on government bonds for the next 2 years. I take it that it's at 2008 levels at the moment. What was going on at the time? Therefore, the carry trade will hurt everyone, even banks, but there will be exhilaration and a first risk on assets. Then there was the massive crash. Now, gentlemen, I think this might actually happen. The problem is that they need to increase rates in order for this to happen, right? So first, let's see if they will. Alright, folks, here it is. Take a look at this. Hold on a moment, the code was just cracked by us. You know, I'm serious. Therefore, the Bank of Japan might increase interest rates in October, even if something's going on over there, but it appears like an election or some sort of political race. Because it states that the leadership election will continue, even if this individual wins. Alright, we are aware of the strategy.